Hit it. Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Lundgren.
How's it going, gentlemen?
I like that you're here joining us on Crypto Fridays. Are we talking any crypto or are we talking traditional assets?
I'm a traditional guy, but I'm sure you're going to come up with something on crypto. But I mean, Bitcoin looks like a pretty good setup here, right?
Does it?
I think so.
What, against 25?
Well, yeah, what I'm referring to is this pattern that it's kind of putting together right now. I mean, you can't see my screen, but hold on a second here.
Throw up our Bitcoin chart, the short-term one, Fonz.
Yeah, throw up the one against 25 that we were just looking at.
I feel like he must be talking about this base.
Is that what you mean?
If you look at the last bottom, it was 2020, of course, and we kind of came up
zoom out to the recent highs. Fonz.
Came up through the recent highs, and then we had a check back to the breakout, and it looks pretty similar to that. I'm not saying the same consequence will follow, but looks pretty similar.
So former resistance from late 2017, early 2018, turning into support over the last year or so. This is what you're talking about?
So if you I don't know if you guys have a screen up.
Yeah, you see it?
Yeah.
Hold on. Yeah, there we go. Okay, so if you look at the bottom in 2020, which was basically the right side, it's a massive cup and handle. This would be like the massive cup side of the pattern. Mm-hmm. And you broke out through those highs, and then you had that check back. I don't know if you guys have a mouse where you can kind of point to where I'm pointing.
Yeah, the 2022 check back.
No, it's even before that. So if you're looking at early 2020, it's right around 11,000. Right, yeah. Go to the right. Go to the right. Keep going to the right. Go to the right. Right there. Right there. Yep. That's what I think we have going on here. So you cleared the highs with a pattern, check back to it. And, obviously you still had overhead resistance to get through, but that's the nature of bull markets is that they, they keep everybody on the sidelines until you clear everything. And then,
I love that the retest happened on like the worst crypto sentiment we've ever seen too.
Yeah. I mean, this whole thing bottomed when Sam Bankman-Fried, hit the headlines. I mean, that was classic bottom action right there. The fact that the whole asset class was going down, nobody can understand why, and the market knew why. And the whole, I mean, you guys know this as well as anybody. I mean, 2021 was all about, if you're a trend follower, you were out of digital assets in early 2021, and then after that, you went on to see all the classic hallmarks of a bubble, ranging from celebrity endorsements and stadium naming rights and, Facebook changing its name to Meta and Square changing its name to Block. I mean, those, you can't make this stuff up, but it's not like that's the first time it's ever happened. And I can assure you it's not the last time it'll happen.
Throw up chart 31 quick. David, now we're seeing it more like on a tactical basis where in March, Bitcoin, had this tradable low on the Silvergate.
Yeah, I love that.
Blow ups. And now maybe this is, something similar happening with the SEC suits.
Yeah, that's the difference between bull and bear markets is that when you have it's not that pattern recognition doesn't work. You just have to be cognizant of the environment you're in. And if you're transitioning to a bull market, breakdowns, they're still a pattern. They're just called something else. They're called false breakdowns.
That's right.
and they trap in the bears. And then that's what it's all about. That's what sustains trend is trapping bears.
And so too, right?
What's that?
Some of the best patterns too.
They are. And the thing with the market, the thing with the stock market is I track the trend of individual stocks across 4 time frames. And if you just focus on the weekly time frame, if you look at charts that look like this, what you see here on Bitcoin, at the stock level, and you track once the stock broke down out of a pattern like that, what has it done since then? It turns out that right now, it's about 90% of the stocks that have broken down out of a pattern are lower from where they were before they broke at the point of breakdown. So that still indicates from a breadth perspective, we're still in a bear market. Now, there's a lot of things that are getting a lot better, but that's been one of the hallmarks of this bear market that's been kind of sustaining me and keeping me more. I'm definitely not bearish, but much more balanced. I run a hedge fund, and when I'm in a bull market, I cover all shorts. I mean, there's no reason to be short, right? It's literally a hedge fund. Like when you're in a bad environment, let's put on some shorts to protect ourselves. That's what it's for. So I'm getting closer and closer to the point where just cover all shorts and gross up the long book and the names you like.
But David, I'm told that it's a banking crisis.
It is. It absolutely is.
With the S&P 500 making new 52-week highs every week, and the Nasdaq making new 52-week highs, and it's a banking crisis. We should have more. We should have a banking crisis more often.
I have this chart posted on my site, guys. I should have put it in a list that because I knew JC, I should have known you were going to talk about this. But it's a chart that shows back to 1980 all the major bankruptcies in history, and I forget what the number is, but it's something like 70% of them happen right after bear market bottoms. So the stock market goes down because it's telling you these bankruptcies are coming, this crisis is coming, and we're all going, what, why is the earnings are great, the valuation's this, and everybody's justifying why they should stay long in a bear market. And then when the news finally starts to come out and people are like, now I understand why, that's when the market bottoms.
So the bank failures were priced in late last year when we were bottoming. Market looks forward 3, 6, 12 months even.
But how many do you need to blow up? How many did we get? Like 4, 3 or 4, 5?
3 big ones.
I'd say, well, including global, because we had Credit Suisse as well, right?
Oh yeah,
So,
right.
I mean, come on, that was a zombie for. I think we're all surprised it took that long for that one.
Yeah. I thought they were gone already as it was.
Exactly. Touche.
David, you got to talk to us about this Wall Street lullaby. JC, look at this chart. It's on slide 32. This looks like something we're gonna like.
All right, talk to me.
Yeah. Okay. So I posted this thing on Twitter actually, and it's by the way, this is how I use AI. I went to what's the name of the site? DALI. I don't know if you guys have used this yet.
Yeah.
But I went to the website and I just said, create an oil painting of a trader sitting in front of his screens, laying back in his chair, sleeping, to present this image of basically Wall Street is sleeping. And you should check out this. It's on my site and it's also on my Twitter feed. But it's an amazing painting. But at any rate, the whole point is that I called it Lullaby on Wall Street because the market hasn't hit a new 52-week high, and by now it's got to be, 16, 17 months. But since having not hit a new 52-week high, it's also not during that bear market. It's now gone 6 or 7, or maybe it's now 8 months without hitting a 52-week low. So you're kind of like going sideways. This has only happened 8 times since 1970, and you can see them all marked here with the numbers. And the only one that didn't resolve higher was actually in the 2000 to 2002 bear market. So we had been in a bear market. We didn't hit a new low for 6 months during that bear market, but then we went and rolled over and hit another another low. That's the only time we did that. The rest of them all resolved higher. So I just I know it's hard to I'm a dyed-in-the-wool trend follower. I do not do anything that's counter trend or contrary to trend. But at the market level, when we're down 25, 30%, it's just like, man, you just have to stop placing bearish bets. Even though the trends look, they're perfect. Isn't that amazing? Am I talented or what?
That's crazy.
So good.
Right?
And I worked on Wall Street for many years, and I would often see traders and brokers asleep just like that, actually. And we would throw like little pieces of paper, try to get it in their mouth. We did that. That's real. That's true.
That's fantastic. Thanks for pulling that up. Whoever did that, you guys are
that's the Fonz, Fonz coming through in the clutch. All right, let's talk high beta, low volatility. Low volatility stocks, consumer staples, things like that tend to catch a bid when stocks are under pressure, and bear markets continue to make new 52-week relative lows. The defensive areas, staples, utilities, even healthcare, just low volatility, all new 52-week lows every day on a relative basis. That doesn't sound bearish.
No, I know. I totally agree with you. If you actually look at this, you can see that, well, first of all, if you just look back in the history of the chart, and this is just a relatively short-term chart, but this is true through history, that as you can see, the red lines, the red arrows are periods where you can see these ratios are all going down. And so it's discretionary versus staples, high beta versus low beta, and copper versus gold. And all those red arrows are during stock market bear markets. So you can see these things, they're descriptive of bear markets. And so when you see these trends in negative configuration, if the stock market's not already in a bear market, you should be mindful that it's likely impending, right? And then the green arrows overlay with stock market bull market. So when these things start to turn, you should be mindful of the possibility that the market, in its infinite wisdom, the weighing machine that it is looking forward through all the headlines and saying things are getting better. And what I want to point out on this is that you can see these things bottomed in January, and they actually started reversing their trend before the bank crisis even made headlines. And what I think is most interesting is that we literally just had 3 of the 4 largest bank failures in U.S. history And prior to that happening, so that was March 7th when it really started. So if we all know 3,800 has been major support on the S&P. If you came to me on March 6th and said, Dave, I know you think 3,800 is a really important support level for this budding bull market, but I got a little secret for you. Tomorrow, there's going to be a massive banking crisis, and over the next few months, there's going to be 3 of the 4 largest bank failures are going to be announced. Do you think 3,800 is going to hold? I mean, it wouldn't even take me 2 seconds to answer that question. No way. There's no way. I mean, I remember GFC. I mean, I was investing during that. That was a catastrophe, and this GFC all over again, right? But thank goodness I'm a trend follower. Thank goodness I don't care what I think. All I care about is what the market thinks, right? And the market absorbed all this data, massive headlines and scary headlines, and we tested 3,800 and held it, and here we are. So, in these ratios are starting to break out again.
I think. Let me ask you this, David. Sorry, I'm stealing. Straza gets mad when I steal all the questions for the guests. But Lundgren's here. I got to take advantage of stealing the questions. So this is something that we think about a lot. This is sort of like what I think about, when I'm away from the screens, thinking about the market. You've got this leadership that we've seen all year in growth and technology. And then you've got like the initial leaders off the lows last summer that have really been the laggards this year, the more cyclicals, industrial, small caps. So when you're looking, as a hedge fund portfolio manager, are you looking to press strength, or are you looking to take advantage of that potential rotation? Maybe we've already been seeing it over the last week. Like, how do you think about that?
So I'm as I said earlier, I'm a dyed-in-the-wool trend follower, and I live and die. We all do. I'm just very much mindful of the fact that I live and die by the expectancy formula, which is how often are you right? How much do you make when you're right, minus how often you're wrong times how much you lose when you're wrong. We all live and die by that formula. I'm just extremely mindful of it. And so the only way you get a positive P&L number on the left side of that formula is to make sure you have right tail events. And so that's, if you just need to be explicit about that. What's my job? My job is to try to capture multi-baggers if possible, right tail events, the things that actually make the index do good things, because most stocks in the index don't do good things over time. I have a slide on my site that shows that since 1980 to 2020, 42% of the stocks that have gone into and then later come out of the Russell 3000, 42% of them actually came out at a price lower than when they went in. That's the reality, right? So I don't care about mean reversion. I don't want to pick bottoms and everything else, because I'm mindful of 2 things. Most stocks don't make it. And if I'm going to win, I have to be in the right tail event bucket out on the right side of that distribution curve. And the only way you can do that, literally, the only way you can do that is to trend follow, because mean reversion is going to get you in and out, in and out, in and out all the way along. So when I look at all my work is from the bottom up. I look at equally weighted bottom up everything. So in my work, industrials have been the number 1 or number 2 sector for over a year now, and it's because it's equally weighted, right? So industrials. If you look at the what's leading in industrial, it's all industries and stocks that are tied to the new legislation that's coming out to kind of build factories out across the country. Industrial renaissance. If you guys want to call up a chart of the AIRR ETF.
Infrastructure, pollution, waste management, talking about stuff like that, right?
Right. And that's a new legislation that just came through the Congress, and it's really taking hold finally.
That's interesting.
And the other one was the CHIPS Act. So you put those 2 things together, and like semiconductors as well. I almost kind of view them as being industrial in many ways as well. And if they're building out factories,
throw chart 1 up there.
They're likely to be smart factories with software and chips and everything else. So that's the fundamental story. And then you say, well, what's leading? Well, guess what? That's what's leading.
Explain why. Like, why would you look at semiconductors like industrials? I love this point.
Well, they manufacture. Unlike software where you basically produce it once and sell it as many times as you can. It's like research. You guys know that. Yep. Make it once and sell it as many times as you can. But manufacturing is different, and it requires factories and things like that. And so the point here is that I can't remember what nifty little acronym they put on it, but the Congress passed a a bill that's intent on building out factories across the country, and the CHIPS was about onshoring chip manufacturing, et cetera. So when they build out these factories that have nothing to do with building chips, it's just industrial manufacturing in the U.S., those factories are likely to be smart factories, which benefits chips, right? So we have construction and engineering, materials, all those things that come into building out these factories. Those stocks are leading the market higher, and they seem to have a pretty good tailwind based on that legislation. And then chips on their own, I mean, they benefit from that, and they also benefit from the CHIPS Act, and they also benefit from AI.
We've seen so many building materials stocks come across our lists lately. Alfonso knows what I'm talking about. Whether it's like Beacon Roofing, I'm looking at some of them now. Vulcan BMC looks really good right now. You're right. I had no idea. I didn't put two and two together that this could have had something to do with the legislation, but that makes a ton of sense.
80% industrials on this AIRR, to David's point.
Yeah.
New all-time highs as we speak.
I thought JC was going to yell at me for mentioning fundamentals. And I actually do have to go wash my mouth out later because I don't typically talk fundamentals, but
I know, but David, I think we're all in the camp that fundamentals are what drives asset prices.
100%.
It's just that we don't necessarily need to know what those fundamentals are to recognize the trend of those asset prices.
No, I think the way I try to explain it is that the fundamental the market is the best fundamental analyst on the planet. That's why it's so hard to beat. That's why it's so hard to beat, right? And the other thing too is like these trends are all driven by fundamentals. I have a slide on my deck on my website that shows that if you look at 1 year periods, roughly half of what drives a stock, makes a stock do what it does in any given year, is valuation expansion and contraction. And you guys know better than anybody that one of the best measures of sentiment is valuation. Right. So obviously the very short term, and Charles Dow talked about this back in the late 1800s, is that the short term is driven by sentiment. And there's a perfectly good data-driven demonstration that that's true. But when you get out into 3, 5, and 10 year periods, it's 5% valuation expansion and contraction, and the rest of it is fundamentals. And 75% of that is top line growth.
Wow.
Before we let you run, I'm glad you touched on the sentiment. We're coming off from last year, some of the most depressed sentiment levels I've ever seen. We do a lot of sentiment work here.
Yeah.
I don't think that I've never found like any magic bullet, like golden indicator of sentiment, so I think we do a pretty good job of aggregating all the sentiment data. And I mean, we're talking about some really depressed levels that, in my experience, takes a long time to unwind, right? You want to touch on that before you run?
I think that's the wall of worry at the beginning of a new bull market, and the slope of hope at the end of a bull market. And so the wall of worry is that's what it's all about. It's what sustains bull markets. And that chart that I mentioned that goes back to 1980 and shows the largest bankruptcies in history. Remember, like as an example, General Motors and there was another There was another large financial that went bankrupt after the 2009 bottom. I think Chrysler was in there as well. These are massive companies that went bankrupt after the bottom. And I think it was in 2010. This is how bearish people were and how afraid they were. In 2010, I think it was 2010. Ben Bernanke,
summer of 2010. Everyone thought that this double dips nonsense and all that stuff. Remember?
It's all what you remember most recently. It's recency bias. But Ben Bernanke went to get to refinance his home, and he couldn't get refinanced. That's how scared people were, right? And so that's all. I wouldn't be surprised if we have another bank that goes belly up, and the market just chews through it and goes higher again, because the market was telling you about that all last year.
I remember being, I think I was on Fox, and this was maybe like a month ago or something like that. And Liz Clayman's asking me about, First Republic, on how this is such a big deal. I'm like, Liz, First Republic is less than $1 billion. Microsoft was up $150 billion that day.
Yeah.
I'm like, we're talking about $1 billion company. Who cares?
Yeah.
Right.
Yeah.
I mean, that's, and the only reason that I was reacting that way in sort of the who cares, the market didn't care. The market was exactly like, yeah, whatever, it doesn't matter. So if the market doesn't care, why the hell should I?
Bingo.
One more.
No more.
Stop it. This is a dictatorship. This is what
Who's the boss here?
Dude, Lundgren sounds chippy and optimistic and positive, as do Straza and I. very quickly, 30 seconds before Spencer gets mad at me again. What are you looking for to be like, whoa, maybe I shouldn't be so optimistic? You know, is there something in rates? Is it a breadth thing? Is there a sector rotation thing? Like what are you looking for in the horizon that's going to be like, uh-oh, you know, hit the brakes a little bit on your bullishness?
You know, it's interesting. As I said, I have a hedge fund, so I'm long and short. And in a bull market, I have no shorts. And I'm saying all that only to restate that I do have shorts on right now. I still have shorts. It's a very small position, but I'm actually more of I'm very mixed. I'm like table pounding neutral is what I would call it. And so in that environment,
table pounding neutral. That's the first one.
but my long book is I'm long those things, those companies that we've talked about, that those themes and trends and leadership and whatnot. But I'm not fully invested yet. But I have a risk gauge. It's basically across 4 timeframes, and the quarterly timeframe is still not inflected yet. And there's so much more we can talk about as to why it hasn't yet. It's all breadth measures, and I'm sure you guys are detecting similar things. But when that ticks up, I'm covering all my shorts, and I'm just going to take the long book that I have and gross it up. I already own what I want to own. I'm not convinced yet that we're in the environment yet where you should just be long with no hedge.
Have your shorts been working? Real quick, David, you ruined it. We lost Kimmy anyway, JC, so I'm going to ask another question. Have your shorts been working, and do you get information from that? Like, in other words, if they're not working and they're ripping and you're having to cover for losses, like, do you eventually say, okay, maybe this is an environment where I want to be shorting in?
So the shorts have added alpha since I launched the fund. But what I do I mean, at the end of the day, shorting and long, although you can almost like take the strategy and turn it upside down, that's about where the similarity ends, because you have to behave differently. So we talked about right tail events on when you're long. That's what trend following is all about. There is no such thing as a right tail event on shorting. You can only go down 100% if you're lucky, right? So when you're down,
you keep a margin requirement that, you know, like it's more than 100% in terms of the mechanics of the shorting?
That is true.
A lot more than 100%.
It is true, but there's no 1,000%. There's no 500%. You know, I mean, I guess it depends on how levered you are, but the point is that the skew is just very different. Like there's unlimited loss potential if you don't manage your risk properly, and then there's limited downside. The stock itself can only go down 100%, and that's usually not what you capture anyway. So when I'm short, when I'm down, when the stock is down 20, 30%, I'm actually covering the short as opposed to adding to it. And whereas if I'm up 30% on a stock on the long side, I'm like, should I be adding to this? It's just a different mindset.
You're quicker to pull the trigger. You don't get greedy with the shorts. You take the money.
Have to be.
So Kimmy went off to the trading room. If you guys are following Kimmy, get over there. She just hopped off. So with that said, David, I got another question for you. You and I were having drinks in Washington, D.C. a little over a year ago at this annual CMT symposium. We're talking about wine. We're having a great time. And you know, we were noticing, you and I, just how bearish a lot of people were. And while the bottom wasn't for like another month later, when the new 52-week lows list peaked in June, I think this was like late April of 22. There was just a lot of bearish sentiment at the CMT conference, just a lot of bears. We just had the CMT conference again a little over a month ago, a little bit more optimistic, but still kind of pessimistic, I thought the crowd was, no?
Yeah, no, I thought the big takeaway for me there was I'm maybe I'm biased here, but I'm cautious about being too contrarian with trend following sentiment, because that's what in a trend, in a bull trend, you're right to be bullish, right? So if they could be right, but what my big takeaway was how bullish everybody was on gold. It was like 90-something%.
Everyone was on gold this year.
Yeah.
This symposium.
Everybody. Great.
Really? Really?
It was. They did a live survey, and it was something like 94% or something were thought that gold was going to end at some level higher, and I don't know. I mean, I'd love to buy gold if it started trending, but it's not trending yet, and I think if gold is working, we have other discussions we have to have, because it's generally not a good macro read, and so.
I know, but David, in the 2000s, I remember early in my career, I was a gold bug early in my career, proud. I mean, it was gold bugs were cool back then. You know, these days they're the opposite of cool. But in the old days, they were, you know, Vancouver was partying. I was actually with gold bugs over the last couple of days. They're in a good mood. So 2003, 4, 5, 6, gold was doing great. Gold was actually outperforming stocks. Stocks were doing very well.
Not all stocks. I mean, that was the post bubble unwind, and that was
financials were doing well. Right. Not tech, not growth, but financials, energy, industrials, materials. Those were the stocks doing well. S&Ps were making all-time highs, no?
And that's why gold was doing so well. So you're correct to say that. You're correct to say that it doesn't matter, right? What the fundamental, like I'll almost always say that when trends are inflecting, and I understand why, the trade's probably not going to work. Like when trends are inflecting and I can't really tell you, like I happened to be at a hedge fund in 2002. We launched right at the bottom in October, which was a whole other story. But when we launched, this sort of comprehensive bottom-up, top-down technical process was like, you need to be long energy materials in emerging markets. And this is at the end of a 50% bear market. It's like, you want me to do what? You want me to get long energy and all these things that blew up, and shouldn't I be long utilities and staples? But that's what the technical process was saying. And like, I didn't know why, but that's what we got long. Later we find out that's China, and you don't need to know it, because these trends happen through time. That as long as mankind has been trading things, these trends have taken place. And the point is that those trends took place 100 years ago, 200 years ago, and I wasn't even on the planet. So if they didn't need me on the planet then for them to happen, why do they need me there to understand it today?
Good lesson, David. You know I really like that a lot. Are we going to steal that, Straza? We're definitely stealing that.
That was good. We should show.
All right.
No stealing among friends. We're all friends.
I appreciate you being here. You have an open invitation. David Lundgren has open invites to like our internal meetings. So this is nothing new. You're still open invite, always invited anytime you want.
Nobody wants to come to our crypto meetings anymore, though. What's that tell you about sentiment? Nobody wants to come. Nobody wants to talk about it with us anymore.
Yeah, when Lundgren starts calling me for the link to get into our crypto meetings, start fading Bitcoin. Is that what you're saying?
I asked you for all, like, how do I get educated on all this stuff going on in the digital space? And you knew that was the top. As soon as I want to know and as soon as I want to understand, that's the top.
Well, it had already bottomed when you started reaching out, no?
No. This was in the throes of the bear market.
Originally, but you reached out more recently.
I remember I had just looked at like 500 cryptos, and I'm not even sure if there are 500 left right now, but I couldn't find an uptrend.
Oh, there are.
I couldn't even find one uptrend, and then I jumped on your call, which is a great call, and I appreciate you letting me on.
Anytime, man. Anytime at all. I will let you know when I'm out in Boston. My sister just married a Bostonian and just moved out there, so
I like her already.
Be out there quite a bit.
Yeah, awesome.
Looking forward to doing New England things.
Great place to do New England things.
I love New England things in the summer.
Yeah.
All right. Awesome. Thanks, David. Appreciate it.
Guys.
Thanks, David.
Sorry, awesome. Spencer.
Hey, back-to-back interviews. Everybody who's watching, great interview again.